Over the past 7 or so years, as you can see right here in my long-term dividend growth portfolio, I've invested substantially in numerous different dividend-paying stocks and ETFs. So much to the point to where as of right now, I have around 40 different holdings, which even I admit is sort of overkill. And this is because over the years, obviously different stocks or ETFs seem to offer exactly what I look for my specific strategy as a long-term investor. But as the years have went on, I've found myself only investing in a handful of names. And this is because I think they offer substantially more than the majority of other different stocks or ETFs across the markets. Now in this video specifically, we're going to be going over 3 different dividend-paying ETFs that I cannot stop buying pretty much on a daily basis. And at this point, I would consider these 3 ETFs basically all that a dividend investor needs if they want potential to grow their portfolio and want dividend income from day one. So if you want to see which 3 dividend ETFs I cannot stop buying, then make sure to stick around, drop a like down below, and let's get right into the first one. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend growth ETF that I honestly cannot stop buying, especially as of recently, is the Wisdom Tree US Quality Dividend Growth Fund, or ticker symbol DGRW. Now, in my opinion, DGRW does not get enough love across the dividend growth community, where we see most investors hyping up things like SCHD, VU, and even DGRW, for example. And although there's tons of different high-quality dividend growth ETFs across the markets, I think DGRW specifically offers some things that the others don't. Now, it says right here on the website why DGRW gain access to the current investment landscape of US large-cap dividend growing companies by applying quality and growth screens. You can use DGRW as a complement to a high-yielding dividend portfolio or as a replacement for massive exposure to large-cap quality strategies. Now, DGRW has only been around for 10 or 11 years, and this ETF is traded basically straight up and to the right over the last decade with a few dips in between. But to not waste any more time, most importantly, this is the main reason on why I'm such a fan of DGRW and why I cannot stop buying this ETF. And side note, I plan on heavily investing into DGRW for my long-term portfolio towards the end of this year and definitely heavily next year. But like I was saying, the main reason on why I love this ETF as a long-term buy and hold forever position is the holding breakdown and the fact that the holding breakdown is done so elegantly. We have about 30% of the holdings in technology, about 16% in healthcare, then we got about 12.5% in industrials, 11.5% in financials, etc., etc. Now, if you look at the top 10 holdings, you're getting a ton of exposure to things like Microsoft and Apple. If you combine just those 2 top holdings, Microsoft and Apple make up over 12% of this ETF. Now, some investors are sort of critical about this, but I honestly do not mind having more exposure to either one of these. And this is even me saying this considering I own 1,000 shares of Apple. But also you have exposure to things like Broadcom, AbbVie, Johnson & Johnson, Procter & Gamble, Nvidia, the Home Depot, Coca-Cola, PepsiCo. All in all, around 300 different companies that all pay dividends, consistently raise dividends historically, and on top of that have massive growth potential, which as a 31-year-old investor, I think is still pretty important. Now, the expense ratio for DGRW is pretty heavy at 0.28%, and the expense ratios across the board on some of the Wisdom Tree ETFs are a little bit pricey, so this is one of the criticisms a lot of investors have. But with the growth potential, the holdings, and the dividend yield being on 1.67% trailing 12 months, I'm not really too bothered by the 0.28% expense ratio personally. But speaking of dividends, DGRW also does pay a dividend monthly, which is kind of interesting for this sort of style of ETF. And although the dividends are a little bit sporadic, most investors are not really investing into DGRW to get rich off the dividend income, although of course it is a bonus. The next dividend growth ETF that I cannot stop buying, that I've been buying for well over a year now, is no surprise to many of you if you've watched my videos before. I'm talking about the Schwab US Dividend Equity ETF, or SCHD. Now, I'm not going to go too deep into SCHD because I've talked about this ETF so substantially on my channel in the past, and definitely check out some other videos if you want to learn more about it. But simply said, SCHD for my dividend growth investing strategy fits perfectly because I'm looking for ETFs that are well diversified, cheap to own for the most part, which SCHD has a very cheap expense ratio at 0.06%, have grown historically over time, which SCHD has. But one of the main reasons on why I'm loading up on this ETF as of this year is because I'm really desperately trying to get my dividend income up to a certain level by 2025. And even though SCHD has so much to offer on top of that, it does offer a pretty big starting yield at around 3.5%. But maybe most importantly, when it comes to SCHD, one of my biggest takeaways from this ETF, one of the biggest reasons on why I'm so bullish on it long term, is the fact that the dividends have grown over time historically. And I'm definitely hoping that history is going to repeat itself, saying that if I buy shares of SCHD today, it's going to pay me a certain amount in dividends, and hopefully long term over time, it's going to pay me more and more in income as time goes on. Now, of course, we're yet to see if that's going to be the case, but at least over the past, say, 5 or so years, it's definitely been the case throughout multiple times in history. All in all, I think SCHD is definitely worth the hype. A lot of dividend growth investors own a ton of SCHD, and although this ETF is by no means absolutely perfect, I think it's a great complement for a long-term portfolio. Now, the last dividend paying ETF that I cannot stop buying, and I think I'm going to continue to buy heavily throughout the rest of this year, is ticker symbol SPYI, or the NEOS S&P 500 High Income ETF. Now, this ETF crossed my radar I think sometime last year, and simply put, this ETF offers basically everything good about covered call ETFs and little to none of the bad. It says right here some of the benefits. The fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index, which I'm a huge fan of, and implementing a data-driven covered call option strategy. So far, basically any other covered call ETF. But number 2 is where it gets a little bit more interesting. It says actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. So a covered call ETF that has sort of a normal strategy, but is aiming to also be very tax efficient, which is a huge bonus. Now lastly, this is one of my favorite parts of this ETF. It says throughout times, basically this fund will not only sell, but sometimes purchase SPX options, which may provide the opportunity for upside capture in rising equity markets. So if you're familiar with normal covered call ETFs, obviously there's not going to be all that much upside because the call option strategy can sometimes block potential upside. But with the way that SPYI strategy is laid out, it seems to, like I said, have all the good and none of the bad of typical covered call strategy funds. Now yes, SPYI does have an expensive expense ratio at 0.68%, which is a little bit on the higher end for the covered call ETF space, but still with what this ETF has offered so far, at least since it's been around, paying around 50 cents in dividends every single month to investors, while on top of that having a very stable ETF price long term. Although SPYI will never be the majority of my portfolio, for an investor that's seeking to have high income in their portfolio like I am, this ETF will be on my daily buy list for a while now. So there we have it. Those are 3 different dividend paying ETFs that are basically on my daily buy list from here on out, and have been for some time now, because simply put, combining those different ETFs basically crosses off everything I'm looking for as a long-term investor. Now that doesn't mean that I'm not going to also purchase other stocks and ETFs across the market, but those are my targets as of right now. But lastly, now I want to hear from you guys down below. Which dividend paying ETFs are on your daily buy list? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.